Okay, good evening, everyone. Welcome to this Zoom meeting. The purpose of this meeting is to give people the opportunity to ask questions, beginner investors and intermediate investors, and anyone else who have a question to ask relating to stock investing in Nigeria on the Nigerian Stock Exchange. So if you have any question, this is your opportunity, because if you're asking questions randomly in a social media group, anybody can answer you regardless of whether they actually know what they are talking about or not. Anyone can answer you, but this is your opportunity now to ask your question. Don't feel shy, and no question is, how do I say it? No question is stupid or maybe not relevant. Ask your question as long as it's relating to stock investing in Nigeria. So anyone can start if you do have a question. And please try to go straight to the point. We don't really need a long, winding question that it takes you about 4 minutes to actually put your question across. Just go straight to your question, and then I'll try to answer it to the best of my ability so that we can give more people chance to ask questions. Okay, anybody want to start? Or maybe we should say people should raise up their hand so that 2 or 3 people are not talking at the same time. If anybody wants to ask question, just raise up your hand. There is a button you need to click on your phone or your laptop. So once you raise up your hand, I'll call your name. And once you answer your question, then you can put your hand down so that we know how many people left. Okay, so Okafor, please go ahead with your question, and you can put your hand down now.
Thank you, sir. Good evening once again.
Good evening.
I was wondering if you have done NIDF versus FGM bond before. I tried to do it, but I'm not
Hold on. NIDF versus
FGM
what?
bond. FGM bond.
Right. These are you talking of NIDF stock or NIDF bond?
No, NIDF stock. The
Right. You cannot compare stock with bond. There are two different classes of assets. The NIDF stock is under the capital market. So when you invest in the NIDF stock, the value of your share will go up, and you will also get a dividend. I think they do once in NIDF actually do 4 times in a year, but the bond is different. That's the mutual fund, if I understand you. Are you referring to the mutual fund?
No, FGM bond. FGM bond.
FGM bond. Oh, okay. I see what you mean. Okay. All the same, they are still 2 different classes of assets. The NIDF stock is under capital market. The federal government savings bond is under money market. Now, like I said, NIDF, which is the stock, you buy shares, whatever quantity you want. Gradually, the value of your stocks will go up, return on investment, and then 4 times in a year, they give you a dividend. Now, the federal government savings bond, that's under money market. And the way that one works is once in a month, I think first week of every month, they will open that program for us. People can invest within 1 week. You can buy whatever number of bonds you want. I think the minimum is 5,000 naira. And then the government decide what rate of interest they will give every month. So the rate of interest they give this month might be different from what they will give next month. With the federal government savings bond, you can either invest in a 2-year contract tenure or 3-year tenure. The 2-year tenure the interest rate on that is always slightly less than if you do the 3-year tenure. So every 3 months, they give you interest on your federal government savings bond. Every 3 months, they give you interest. But what a lot of people do, smart people, they invest 3 months in a row. So if you invest 3 months in a row, that means every month for the duration of that for the duration of your bond, whether it is 2 years or 3 years, every month you will be paid. So basically, for me, from my own experience, the federal government bond is good for liquidity. If you want to get paid every month, then the federal government bond is good. And then depending on the rate they give, sometimes 12%, 13%, 14%, and sometimes they might give 15%. But if you are looking at a long-term investment that will give you, high return on your investment, and you want an investment that grows in value, then the NIDF stock is better. Whatever money you put in the bond is the same. So let's say you invest 100,000 naira every month for 3 months. That's 300,000 naira. And you do like a 2-year tenure. At the end of 2 years, they will return your 300,000 naira to you. But over that 3-year period, they would have given you interest. So there are two different things. But for liquidity, federal government savings bond is better. If you are looking for a long-term investment, NIDF stock is better. I don't know, does that answer your question? Okafo, does that answer your question?
Yes, very.
Okay,
You're
anybody else
close.
But yes,
can, okay, anybody else have a question? Please go on with your question if you have a question.
Where's your Yokotonia?
Somebody might
Yeah,
need
like,
to, you might need to mute yourself if you are speaking to other people, around you. We don't really want distraction, please. So if you know you have people around you and you are talking to them, please try to mute yourself. And if you need to ask a question, you can unmute yourself. So does anybody else have a question?
Yeah, my question
Okay,
is, good afternoon, everyone.
good afternoon.
Yeah, I wanted to advise on someone who is over 50 and who has like 20 million to invest and is looking at the treasury bill, FGN saving bond, and Nigerian Stock Exchange. But to his own ability, he believe that once you are above 50, that investing on Nigerian Stock Exchange is a total risk. That he would prefer to go with FDA, with bond and every other federal government investment. So from your own experience as an expert, so what will you advise such person? Thank you.
Okay, thank you for your question. Okay, investment generally is a risk. It doesn't matter where you invest. There is always an element of risk. The only difference is some investments have less risk. Some have medium risk and some have high risk. So as a smart investor, what you want to do is you want to put your money in places where there is minimum risk, there is medium risk, and there is high risk. The higher the risk, the more the returns. But you don't want to really gamble with all your money and say you want the highest risk. You want the highest return. Because if you're looking for very high returns, then there will be some element of risk you will need to take. But if you are, okay with medium returns, then again, you can invest in such assets. And if you don't want any risk at all, and even when people say if you don't want any risk, there is still an element of risk, but the risk is very, very, very minimal. What Robert Kiyosaki said is, don't think about avoiding risk. Learn to manage the risk. Do your due diligence. Do your research. Listen to people that know better than you, people that have been there and they have the track record and they can show you their track record, because it's very easy for a lot of people to put themselves out and saying, yes, I know what I'm doing, but can they really show you what they've done and the returns they have gotten on their investments? So let's come back to your question. Somebody have a 20 million naira and the person wants to invest. What I'll say is diversify your investments. A little bit of that money in the stock market, a little bit in federal government savings bond, a little bit in a mutual fund, and then finally, I would say a little bit in maybe private pension. I mean, if you are not working with the government or with a private company, if you are working for yourself, if you are self-employed, then you should do private pension. And also another thing you can invest in is real estate. Buy land. The land will grow in value. I've never heard of any land that is bought for X amount, and then 2 or 3 years later or 5 years later, you now have to sell it for lower than what you paid for it. It doesn't matter where you buy that land. Anytime you want to sell it, you're going to sell it for more than what you paid for it. The only thing you need to do is make sure you do your documentation right. If you are buying land, make sure you get a CFO, make sure you have your survey document, make sure you have a title deed, do it properly, involve a lawyer, and buy from reputable organization, not just from a family. If you are buying from family, still make sure you involve lawyer and the documentation is done correctly. So again, let's come back. 20 million naira you want to invest. There are 4 or 5 or even 6 or 7 different classes of assets that you can invest into. Just as I will always encourage people, don't put all your eggs in one basket. You have 20 million naira and you put everything into the stock market. Don't do that. But again, I will always advise people, don't over diversify your portfolio, because if you over diversify your portfolio, then the returns you will get is not going to be what's the right word? You will get some returns, but you're not going to maximize the potential for your investment. So you put money in a capital market, you put money in a money market, you bought some land, you do private pension, you put some money in high interest savings account, you probably do some ETF, you invest in US stock market, you have over diversified yourself. So amongst all the different classes of assets, think of maybe about 4 or even 3 that will give you what you want. Think of some assets you can invest into that have a long-term returns over a period of 3, 5, even 7 to 10 years, and it will give you good returns. Think of what you will invest into that will give you liquidity. Every month, something is coming into your pocket, but your capital is still there. So it's a case of the best 3 or 4 classes of asset. And the best 3 or 4 for you may be different from the best 3 or 4 for me. And the best 3 or 4 for me may be different from the best 3 or 4 assets for somebody else. So what you need to find out is what are the different classes of assets, which I've already mentioned. Number one, and the most popular, is the stock market, capital market, the stock market. Buy some shares. And within the stock market, make sure you also diversify your stock portfolio. So maybe a little bit of shares in banking sector, a little bit in agri sector, a little bit in oil and gas, a little bit in telecommunication. Don't just say if you want to buy shares, then you put all your money into banking. No. Let's say, for example, you decide you're going to put maybe about 5 million naira into the capital market. That 5 million naira should be invested in at least about 4 or 5 sectors of the stock exchange. 4 or 5 sectors. So 5 million naira, you should have some stocks in banking sector, in telecommunication, in agri, oil and gas, maybe which other one is there? Finance. Just think about 5 sectors in the capital market. You can earmark another 5 million naira for mutual fund. And the most popular one is the money market fund. There are different kinds of mutual fund, but the most popular one is a money market fund. And to be honest, that's the only one I invest into. There are different versions, but the money market fund, you have the Stanbic IBTC money market fund, you have the GT money market fund. I think First Bank, they also have their own version of the money market fund. So put some money into the money market fund, maybe about 5 million naira. That's about 10 million naira out of your 20. The remaining 10 million naira, you can spread it in between maybe federal government bond. The thing with federal government savings bond is that it's always a good idea to invest 3 months in a row so that your 3-year tenure or 2-year tenure for your contract, you get paid every month. If you just put 10 million naira into federal government savings bond and you do it only once, that means you will get paid every 3 months. But that 10 million naira, if you decide that, okay, maybe you would take about 6 million naira out of it, and then you do federal government savings bond, 2 million naira every month, and you do it 3 months in a row. That means every month for 2 years, you will receive interest. That money will be paid into your bank account. You can spend it whichever way you want. At the end of the 2 years or 3 years, depending on what you choose, at the end of that period, your 6 million naira will be returned to you. And then you can do it all over again if you want, or you can put it into something else. And I know some people that have even done 6 months in a row. Some people have done 6 months in a row. So the higher the number of months you do in a row, then the higher the money you get back every month. So we've talked about put 5 million naira into stock market, put 5 million naira into a mutual fund, put about 6 million naira into federal government savings bond. You have about 4 million naira left. That 4 million naira, you can decide whether you will put that into a private pension. Start a private pension. I know Stanbic IBTC, they have a section that deals with pension. And the GT also do the same. And some other banks, they also have their own pension manager section. And you can do with any other organization. If you don't put that 4 million naira into private pension, then you can use it to buy land. And it's good to buy land because, to be honest with you, if you have 20 million naira, I would say definitely make sure you buy land. Don't just put all your money into stocks or bond or high interest savings account. And the reason why I will encourage that person to buy land is because all the other assets, they are what is called paper assets. You put money into the stock market, you put money into the money market, you do private pension, you probably buy some mutual fund or whatever. Those are paper assets. You definitely want to put part of your money, your investment, into physical assets, something that you can see, something that you can feel, something that you can touch. And there's no doubt about it, if you put 4 million naira to buy land, depending on the location, it may give you maybe 2 plots of land. It may give you 1 plot. But ideally, 4 million naira, if you can manage it, that 4 million naira, use it to buy at least 2 separate land. 2 separate land, but maybe in the same proximity. Because, for example, if you live in Abuja, there's no point buying 1 plot of land in Abuja and then 1 plot of land in Lagos. The proximity is too far. You can't manage it. Or maybe you live in Port Harcourt. You buy 1 plot of land in Port Harcourt, and then you buy 1 plot of land in Sokoto, or you buy 1 plot of land in Ibadan. So buy your land within the same proximity, within the same town. And with 4 million naira, you should be able to buy 2 separate land. Don't think you have to buy land in a place that is already fully developed. Because I know some people will tell me, oh, your 4 million naira is not even enough to buy 1 plot of land. It depends on the location. Why would you buy land with 4 million naira, 1 plot of land for 4 million naira, when within the same town, there will still be places where you can find land that is cheaper and is not going to be too interior, not too far, from the main town. So it's better to use that 4 million naira, buy 2 separate land, maybe 1 plot each. If you have the ability to develop it, then you can develop it and then rent it out. But another thing I need to mention is most people think about developing their land for accommodation purpose. Your land should not be developed for accommodation purpose alone. You can build a warehouse on the land and you can rent out the warehouse. You can build a cold room so that people that sell fish and some frozen food, they can come and put it there and they will pay you rent every month. You can build a building that can be used for hospital, which hospital can rent. There are different things. You can even use your land as a farm. You can build a poultry on the land. So there are different things you can do with your land. So I hope that gives you an idea what to do. But finally, the way you will spend your 20 million naira, it will be different from other people, from the way other people will spend it. So I'm not saying to you that you have to put 5 million naira into a capital market, 5 million naira into stock market, 6 million naira into federal government savings bond, and 4 million naira into land. I've just given you an idea of what you can do. It's now up to you to decide how much do you really want to put into capital market? How much do you really want to put into money market? How much do you really want to use to buy land? That's up to you to decide how much you really want to spend on each class of an asset. The main point is that 20 million naira should not be put into one investment. Diversify it, and at least 3 different classes of assets, at least 3, but not more than 4. If you start diversifying into 6, 7, or 8 different assets, which means you're going to put about 3 million naira into each class of asset, you might not get the maximum returns if you over diversify. Okay, I hope that answers you so that we don't drag it for too long. But let me know, does that give you an idea? Does that answer your question?
Yeah, that's very okay. Yeah, thank you.
Okay. All right. Okay. Anybody else with question, please? Anybody else with question? Ask your question, anything you have in mind, which you have been thinking about what to do, is an opportunity for you to ask now. So please ask your question. Nobody else have any question?
Okay, a little question, sir.
Okay.
Though I didn't join early. But what caught my interest is the topic you display on your dashboard. Quality stocks, or cheap stocks, something like that. Sir, do you make recommendation of do you suggest? Let me not use the word recommendation. Can you suggest good stocks, quality stocks, at least for some of us that are low class? Can you suggest quality, but low in capital? That is those penny stocks that one can buy,
Okay.
and make something.
Okay. The reason why I display this information on my screen is because it's something I'm going to talk about, but I want to give people the opportunity first to ask their question because their question may not relate to what I'm displaying. So I want people to ask their questions, and when people have finished asking questions, then whatever time that is left, I'm going to use it to talk about quality stocks and cheap stocks. So I'm definitely going to talk about this, and I'm going to give you an idea of cheap stock and quality stocks. So, but before I go into that, does anybody have any other question at all? Things you've been going through, whatever challenges you've been having with your stocks, or even any other class of investment that you might have in your portfolio. Does anybody else have any question?
Okay, I can ask another one, sir. Can I ask another one, sir?
Yeah, go ahead.
I met you. I joined when you were talking about how you can spread money in federal government bonds and you get paid 3 months, 3 months or monthly basis. So I didn't get that. I didn't get that side very clearly. I don't know if you can throw more light on it.
Okay. Federal government savings bond opens every month. It's a government. It's a federal government initiative, and it's like you lending the federal government money. And they open this program every month, the first week of every month, and it's always open for about 5 days. So within that period, you can actually buy what is called federal government savings bond, and the minimum amount is 5,000 naira. I think you can go as far as, I think about 50 million naira. That's the highest you can invest. Now, when you invest in the federal government savings bond, it is good for liquidity. And what that means is you lend the government some money. And then if you only do it 1 month, the government will pay you back your interest every 3 months. So let's say, for example, you buy federal government savings bond of 100,000 naira and you only do it once. And then you choose the 2-year tenure, which means the federal government will hold on to your 100,000 naira for 2 years. But in between that 2 years, let's say, for example, they said the interest they will pay you is maybe 10%. I'm just using that as an example. So let's assume 10% of your 100,000 naira is 10,000 naira. is 10,000 naira. That's 10,000 naira. They will now divide it into 12. They will divide it into 12. No, sorry. They will divide it into 4. They will divide it into 4, and every 3 months, they will pay you a portion of that 10,000 naira, which they should have paid you at the end of every year. So that 10,000 naira, they should have paid you as interest on your money. They will divide it into 4, and they will now pay you that interest every 3 months. But if you have invested over 3 consecutive months, then it means they will be able to pay you every month, because your investment will overlap. And that means they will pay you every month for that 2 years or 3 years. That's the way federal government savings bond works. So it's good for liquidity. And the rate, in my opinion, is good, or should I say it's fair, because when it comes to investing, any investment that gives you interest rate of at least 10% is a very good investment. But some people might be thinking, oh, why can't I get 15%? Why can't I get 20%? Why can't I get 25%? The higher the interest rate you are looking for on your money, the higher the risk you are going to take. And there is a likelihood or probability you may end up losing your money along the line. So if you get investment that is going to pay you 10%, is good. 12%, better. 13%, 14%, 15%, is still good, is still better. Even some companies will pay you maybe 17%, depending on the kind of investment, and maybe about 18. I know of GT Money Market Fund. They pay 17.1%, and I'm happy with that. And I know GT is a credible company. If they promise to pay 17.1%, they are not going to disappear or run away with my money. I know it's a credible company. Stanbic IBTC Money Market, they pay 15.5%. Again, it's a credible company. If they promise 15.5%, I know they will deliver. But if you are investing with a company that you don't really know, and they are saying they will give you 20% or they will give you 25%, and you're thinking, yes, I need higher returns for my money, then you are taking a chance, you are taking a risk, unless you know that company very well and you know they have a track record for 10 years or more. Don't start looking for somebody that will pay you 20% interest per annum. Anywhere between 10% to about maybe from between 10% to about 20% is good, depending on the company, is good. So that's the way the federal government savings bond works, so that we don't drag that too much. Does that answer your question?
Yes, sir. Thank you, sir.
Okay. Anybody else? Does anybody else have any question? Please, let's deal with your question now. Anybody question something you might have been struggling with on your own? Does anybody have any question? To be honest, I'm a bit surprised, because I did this last week, and I was asking people to ask me questions. Only about 3 or 4 people ask questions after I've repeatedly say any question. Only about 3 or 4 people. But when I go on different social media platforms, I see people throwing questions around in a social media platform. Oh, when is Dangote Cement going to pay? When is Boa Food going to pay dividend? I have this problem with CSCS. I don't even know what to do. Can somebody recommend a stockbroker to? People are asking questions randomly. And when you ask questions in a social media platform where there are maybe 500 people, 700 people, everybody will give you their opinion. And then at the end of the day, you probably won't even know which one to follow. So this is your opportunity to ask questions now. So does anybody have any question regarding your stocks, your portfolio, maybe federal government savings bond, maybe pension, maybe mutual fund, maybe something that happened between you and your stockbroker or between you and the registrar? Does anybody have question?
Yeah. Good afternoon once again. Another question that I would like to ask. We have different type of investments. Now, there is one called commercial paper, which I believe the returns is higher than any other government investment, and because it gives like 25% sometimes, and sometimes 23%, and it's just for 1 year tenure. So, and people don't really do it simply because you can't start with a small money. The minimum you can start with is 5 million naira to 50 million naira. And so, what do you advise on this type of investment for a first timer?
How much is the minimum?
Minimum is 5 million and the maximum is 50 million. Have you heard about commercial paper?
Yes, I've heard about it. So I don't have any investment in any commercial paper. I will be honest and straightforward with you. So the minimum is 5 million naira. Are you
Yeah.
interested in commercial paper? Or you just want to have an idea?
No, I just want people to have an idea because we have a lot of investment and which people don't know about. You understand? So, and you understand when we talk about different type of investment, so that people can have an idea, so they can know, you understand, what to do.
Okay.
And the rest. So that's what I'm chipping in. Maybe.
Okay, I understand what you mean. What I would say is, if the entry point is 5 million naira, unless you have done some other investment that is worth 5 million naira, I wouldn't advise you or anyone who is a beginner investor to go and put their money into an investment that has a minimum of 5 million naira entry. For you to invest your money in any investment that the minimum is 5 million naira, I would say you must have got some other investment that is equivalent to 5 million naira or more, because that gives you diversification. If you've only bought stocks and the total stocks you've bought over a period of 1 year or 2 years or whatever period you've been buying stocks, if you only have stocks of 1 million naira, why do you want to put your money in commercial paper, which has an entry point of 5 million naira? To me, it's not advisable. It's not advisable. But if you have bought stocks, which is about 5 million naira, you have about maybe about 3 million naira in federal government savings bond. You have about maybe another 3 million naira in a mutual fund. Maybe you've bought a couple of land here and there, and your portfolio is well over 10 million, even over 15 million naira. And you still have 5 million naira that you can throw around and invest. Then you can buy commercial paper and go in at a minimum of 5 million naira. But if you don't have any investments that is worth at least 10 million naira, I wouldn't encourage anyone to invest in a commercial paper with an entry level of a 5 million. I'm not saying commercial paper is not good, but if the entry level to an investment is high, then the first thing that should come to your mind is, should I risk all my money and put all my eggs in one basket? If you already have other assets, you've put money in stock market, money market fund, you've bought land, you've done private insurance, private pension, then why not? You can do commercial paper. But personally, I have never invested in commercial paper, but I don't have anything against it. So that's what I would say. The most important thing is diversification, because if you have only 5 million naira, I wouldn't encourage you to spend all your 5 million naira on stocks alone, even though stocks is the most popular investment you can do that will give you the highest or the best returns over a period of time. But still, if all you have is 5 million naira, I won't advise you put all your 5 million naira into stocks. Like the other gentleman said earlier on, somebody have 20 million naira to invest. I wouldn't say put 20 million naira into stocks, and I wouldn't say put 20 million naira into commercial paper. The most important thing is diversify your money. And if you have diversified your money, you already have a strong portfolio of investments, which include capital market, money market, private pension, you've got land and some other things. Then if you have a 5 million naira, you can put it in commercial paper. And that also applies to some people that have asked me about investing in US stock. I always tell people, you have to count the cost. You have to know it might look what's the right word? It might look interesting, or it might look tempting. It might look tempting. Oh, let me do some US stocks, and then I can get dividend in dollars. But if you live in Nigeria, you have to think of the rate of exchange. Okay, you're going to buy that stock in naira, but what is the rate of 1 pound to 1 naira? If 1 pound to 1 naira is about 1,500, and I'm just using that as an example, if dollar is $1 to 1,500 naira, and you want to buy a stock, a US stock, which is about maybe even $10. So $1 is 1,500 naira, and 1,500 times 10, that would be 15,000 naira. So you are using 15,000.
I'm good. Are you?
Yeah, Kayla sent me.
What's that?
Kayla?
Please mute
She
yourself.
sent me to drop off some
Please
boxes.
mute
Okay.
yourself.
Yeah. Okay. Who's that?
Kayla?
Kayla. Okay.
Please
Yeah.
mute
Let me take it aside.
yourself.
Yeah, there's more.
Okay. Thank you.
Okay, so if the US stock you want to buy is $10, and in naira, that's going to cost you like 15,000 naira. Why would you want to buy 1 unit of US stock at 15,000 naira just because you want to say you have a US stock? It's not worth it. But if you have already built your portfolio on the Nigerian Stock Exchange, and you have a stock portfolio of about 5
Okay. Thank
million
you.
naira, and you have some money in federal government savings bond, you have some money in a mutual fund,
You still have more? Okay.
you've probably bought a couple of land here and there, then you can invest in US stock if you can afford it. So it's a case of diversification, but also count the cost.
Okay.
And research has also shown that the Nigerian stock market outperform US stock market, UK stock market, and a lot of advanced countries. The kind of returns you will get on your investment in the Nigerian stock market, you cannot really get it if you put your money into UK market or into US market. And especially when you factor in the rate of exchange. To buy it, you calculate the rate of exchange. When they pay you, again, you calculate the rate of exchange. So it's going to water down whatever interest or profit you are going to make. So that's my own response to that. I hope that answers you. Does that answer your question? Hello? Hello? Right. Okay, that gentleman is not talking. Okay, does anybody else have any question? Anybody else? Any question? We have quite a number of people here, so I'm surprised nobody is asking question.
So
I can see some people are touching. Sorry, hold on. I can see some people are typing their question into the chat. Let me just have a quick look because it's a bit difficult for me to be speaking and to catch up with the chat. But let me just use 1 minute to look into the chat and see what people are saying. Okay, so somebody just write commodities. Well, I don't know what commodities are. I don't have any investment in commodities. Which would you advise, sir? Federal government treasury bill or federal government bond? I have federal government bond, so I will probably suggest federal government bond. I've not done treasury bill. I've not done it. So, but again, you can do your own research. Based on my own experience, I can only tell you what I have done. Please mute yourself. This is not fair. Oh, no. Can you please mute yourself? Okay, so as I was saying, I can only advise you based on what I have done. If I have not done it, I'm not going to be advising you or encouraging you to do it. So I don't have any investment in a treasury bill, but I've got investment in federal government bond and it's doing very well. So I can definitely encourage you to do that. Okay, both are good. One is short term and the other is long term of 3 years. Okay, somebody else was answering that question and yeah, you can read what they say. Okay, that's fine. So go on with your question, please. Anybody else with a question?
Okay, sir. I wanted to ask if, since you are preaching diversification in all these investments, things like federal government bonds, commercial paper, money market, and what have you, can one do them with fear? As in, is there losses? Can one incur losses in any of them?
Right. Okay.
Can it be said that your money
No,
will
I have.
just
Okay, I have said it earlier on. I don't know when you joined this meeting, but I've said it earlier on. There is no investment that is 100% safe. The safest investment anybody will tell you is federal government savings bond, because that investment is with the federal government of Nigeria. And over the period of time that they've been doing that investment program, the federal government of Nigeria has always paid the interest. They have never missed paying the interest, and they have always returned people's money when it is due for returns. And that's why people will tell you federal government savings bond is the safest. Some people will say it is 100% safe. Yes, okay. The government has never defaulted. So we can say it is the safest. But we pray they never default. So that tells you there is no investment that is 100% safe. I cannot tell you if you put your money into this, it will never fail. There are different levels of risk. So you have to do your due diligence. And in doing your due diligence, for example, people say that buying stock involves risk. And we've seen so many stocks that failed. Some stocks have gone out of business. I mean, the company behind the stocks, they've gone out of business. We have seen stocks that did not pay dividend for many, many years. We have seen stocks that pay dividend of maybe 30 kobo per share, 10 kobo per share. In fact, I saw one recently, 11 kobo as dividend per share. But my research shows that all these companies that are paying 10 kobo per share as dividend, 15 kobo per share, they make profit in billions or millions or whatever. They make profit. They just choose not to reward the investors. But the value of their
Mommy,
shares, the
go and
value
put your
of their
laptop.
shares is growing.
Be using your
So,
laptop.
so
There's nothing. Don't worry.
some
Hello,
people,
sir. Can
Don't
you
be
call that
scared.
guy's name?
oh no,
Be
sorry,
reading. Be reading your book.
can everybody
Be reading
mute
your book.
yourself, please?
Who is this noise maker now?
Or you will go
M-
to. Or you will go to basement.
okay, I've
It's
mute all.
cool. That place is cool.
Okay, I've actually mute everyone now. So if you want to talk, then you can unmute yourself. If you want to talk, you can unmute yourself because there has been a lot of background noise and distraction. Okay, so what I was saying, I've lost track of what I was saying now. Where was I? So, okay, hold on. Just hold on. Right, okay. Now I remember what I was talking about. Okay, so I was talking about if you want to invest, there is no investment that is 100% safe. There is no investment that is 100% safe. Whether you put your money into the stock market or money market, or even you put it into private pension, or even if you buy land, there is no investment that is 100% safe. So the first thing you need to do is do your due diligence. That's number one. Once you've done your due diligence, you have found some investments, whether in the stock market or whether it's in the money market or private pension, or maybe you found some land to buy. The next thing you want to do is diversify your investment so that even if one of the investments fail, you still have the rest that are left and they will be doing fine. So that's all I can say on that. Okay, if anybody else have any question, unmute yourself. Please ask your question.
Sorry, sir, you were talking about some stocks that paid 11 kobo, and you said that from your research they made a lot of interest. They just didn't want to reward
Yes,
investors.
majority of them, they are making profit, but they will use the excuse, oh, we want to use that profit, we want to use it to stabilize the company, we want to build more offices, we want to, invest in technology. But they've been saying that for like more than 10 years. So how can a business be running and every year they are paying 10 kobo as a dividend per share, and they keep coming up with different excuses? For me, it's not acceptable. For some people, it's okay. Some people will indulge them. That's okay. I can't force anybody not to buy penny stocks, but I know where I can put my money to use and I can get better returns. So anybody who wants to advocate for penny stocks and say, oh, well, if they don't pay good dividend, at least the share price will rise. And in 5 years' time, maybe it would have done a 1,000% return on investment. Maybe in 7 years' time, it would have done 1,500% return on investment. And what I say to those people is, you invest now. Why do you want to wait 7 years to get a good return on your investment before you can enjoy the fruit of your labor? And don't forget, it doesn't matter how high the return on investment is for these penny stocks. You cannot enjoy those return on investment, even if it is 5,000%. You cannot enjoy it unless you sell your stocks. And I don't want to sell my stocks. I am an investor, not a trader, not a speculator, not a gambler. I am an investor, and I invest for the long run. And let me put that into perspective for you. I bought some shares with Jitco, and every year, Jitco pay me good dividend. Within 2 years that I've been with Jitco, the dividend they have paid me is more than half of the money that I used to buy the shares. That's the way to enjoy your investment, not for me to wait for 5 years and see where Gitco shares would have risen to. Maybe I bought it for 47 naira per share, and then for me to wait until it gets to 500 naira per share before I can enjoy my investment. And then at that stage, I will have to now sell my shares before I can get something back. No, I don't want to sell my shares. Let my shares keep growing, but keep paying me good dividend. Then I will be a loyal customer to that stock. Okay, does that answer your question?
Yes, sir.
Okay, I'm going to show you some practical figures in a moment, but let me see if anybody else have any other question before I go deeper into these quality stocks versus cheap stock. Does anybody else have any question?
Hello, sir.
Yes, sir.
Good afternoon, sir.
You're welcome.
My name is Michael. I was invited here by a friend who just told me about it this evening.
Okay.
I want to say thank you for sharing your knowledge. I do really appreciate it.
Thank you.
My question is, if I have 10 million naira, what investment can I go into, or what do I start with 10 million?
Okay. Somebody else ask a similar question. Maybe you haven't joined by then. At the beginning of this meeting, somebody asked me, someone have 20 million naira. What would I suggest? So I will just summarize it for you. What I explained earlier on at the beginning of this meeting. You have 10 million naira. The first thing I'm going to say is that 10 million naira, you need to diversify your investments. Don't put your 10 million naira into stocks alone. Don't put your 10 million naira into money market alone. Don't put your 10 million naira into private pension alone. Don't go and use all that 10 million naira to buy land. So there are about 6 or 8 or even 10 classes of assets that, can form your investment portfolio. Your investment portfolio covers your investment in capital market, that is the buying of shares. It covers your investment in money market. Money market is a federal government savings bond, treasury bill, and mutual fund. Your investment portfolio covers that. Your investment portfolio also covers your investment in a mutual fund or treasury bill or federal government savings bond. Your investment portfolio covers whatever money you contribute to a pension fund. So there are different things you can use your money to do. So what you want to do then is think of all these different classes of assets that can form your investment portfolio. Look for about 3 or 4 that you think resonate with you, because it is not every class of investment that resonates with everybody. Somebody was talking about commercial paper a few minutes ago. I have never invested in commercial paper, but some people are interested in it, and that's okay. But there are alternatives to commercial paper. So if we talk about stock market, there is no argument about that. It's just about buying shares. And again, if you are going to buy shares, then within the stock market, you have to think about which sectors of the Nigerian stock market do you want to invest your money into. It is not all the sectors on the Nigerian Stock Exchange that are profitable. It's not. To a larger extent, the insurance sector is not really pulling its weight. I'm not saying the insurance sector is bad, but it's not pulling its weight compared to the banking sector. So in the Nigerian Stock Exchange, if I'm going to tell you the sectors that I think has really performed very well, I will say banking is number one. And then the agri sector. Okay, let me put it this way. A lot of the sectors that I'm going to mention, they've done very well, but still we have some shares within that sectors that are not doing well. So if I tell you the banking sector is the most lucrative sector on the Nigerian Stock Exchange, and there is no doubt about that. You can Google it, you can ask anybody else. The banking sector is the best, the most lucrative on the Nigerian Stock Exchange. But the question now is every stock in the banking sector, is it giving investors the good returns that they deserve? The answer is no. So that means you need to do your due diligence. If you want to put your money into the stock market and you want to invest in the banking sector, your due diligence has to cover which banks are doing best on the Nigerian Stock Exchange in the banking sector. And everybody knows GSWYM is number one. There is nobody competing with GSWYM. GSWYM is number one when it comes to banking sector. In Nigeria, Zenith is number two. And all others, they are coming behind. But among all the others that are coming behind, there are also maybe about 4 or 5 that are also doing very well. So I'll give you an example. I bought GSWYM because I know GSWYM, is number one. But after GSWYM, I also bought Stanbic IBTC on the stock exchange. Later, I discovered that Zenith is number 2, not Stanbic. But Stanbic is doing very well. So for my own personal reason, I decide I'm going to keep Stanbic. I'm not going to buy Zenith, even though I know Zenith will give me more money and is doing better than Stanbic. But the question now is, why did I make that decision? For me, one of my principles is that in any sector on the Nigerian Stock Exchange, you don't need more than 2 stocks in the same sector. So when you are talking of a banking, you want to buy maximum of 2 stocks, maybe 1, but maximum of 2. Once you've bought GSWYM, you've bought Zenith, you don't need any other stock in the banking sector. But I have bought GSWYM, I have bought Stanbic. If I'm not going to go against my principle and I want to get Zenith, then it means I have to sell my Stanbic IBTC stock. But I don't want to sell it. I prefer to hold on to it. So that means I'm going to leave Zenith. Stanbic is doing okay in his own way. It's not bad. It's doing fine. But again, these are the things you have to learn, because as an investor, you have to form your own principle, your guiding principle. And once you know what you are doing, nobody else can, derail you or teach you something different. I'm not, how do I put it? I know what I know. And I know there are people that know much more than me about the stock market in Nigeria, about the capital market. But there are some things I know, and there are some things I've learned by experience. So even if somebody now come up as a guru in the stock market and want to tell me something different from what I have learned and which I'm already practicing and I know is working fine for me, somebody cannot just come and tell me to do otherwise. Somebody else might tell you, it's okay, you can buy 3 stocks in the same sector. It's okay if that's what they want to do. But I know that you don't need more than 2 stocks in the same sector if you truly want to have a diversified portfolio. Because the moment, if you have a stock portfolio of maybe you have a stock portfolio of 1 million naira, and you already have about 8 to 10 different stocks, and in that 8 to 10 different stocks, you have about 4 stocks from the banking sector, there is a very likelihood that you will have some stocks in the banking sector that will be paying you dividend per share of 10 kobo or 15 kobo or 70 kobo or whatever. But if you are really following the principle that you set for yourself and you're following it strictly, you know that once you've bought Jitco and Zenith, you don't need any more. If for any reason you bought Jitco and Stanbic, like I did, you don't need any more. If I really want to buy Zenith, I will have to sell Stanbic. If, for example, you have bought Zenith and Wema Bank, and you now realize Jitco is number 1, and you really want to get a Jitco, it's up to you to sell your Wema Bank and buy Jitco. If you don't have the principle, if you are not disciplined enough to follow the principle you have set for yourself, which you believe and is working for you, then there is nothing anybody can do for you. Once you know something, you know it, and nobody can derail you or teach you something against the principle you have already set for yourself. Anyway, let me bring it back. So you're talking of 10 million naira. I would say your 10 million naira, put about half of it in the stock market, because the stock market will always give you the best return, but the return is not quick. It's over a period of time. You have to choose to be a long-term investor, not a trader, not a speculator, not a gambler. You cannot put your money in the stock market now and be asking, oh, if I put 5 million naira into stock market now, in 6 months' time, will my 5 million naira have grown to 8 million, 10 million? No, it takes time. The stock market is a long-term investment, but it will definitely give you the good returns. That's why I said if you invest in the stock market, part of the things you should be looking for is, 1, stocks that have a good balance of capital growth and dividend history. There are stocks that have been paying dividend for more than 15 years, more than 20 years, and they are paying good dividend. And year in, year out, their dividend has been growing. Jitco did not get to where they are now overnight. There was a time Jitco was paying dividend of 1 naira per share, dividend per share of 2 naira, dividend per share of 3 naira, 4 naira. It has grown over a period of time. That is the kind of stock you want to invest into. So if you are investing in the stock market, it has to be stock that give you good balance of capital growth and dividend income. Secondly, it must have a track record that the dividend is growing every year. Not that they pay you 1 naira this year, the following year they pay you 1 naira, the year after that they now go back to 80 kobo, and then the year after that they go to 1 naira 20 kobo, and then after that they go back to 50 kobo. It has to be growing. So good capital growth, good dividend. And then again, you also have to think of, okay, the stock I'm going to invest into, is it a very stable stock? What is the probability that at the end of the year, they will be able to pay dividend? That is when things like, do they have dollar income in that stock? Does that company do business internationally? There are stocks in Nigeria that generate dollar income. Jitco is one of them. Seplat is one of them. Okomu is one of them. Dangote Cement is one of them. So there are different things you need to put into consideration. Put some money into the stock market, diversify within the stock market, but also put some money into the money market. You can decide maybe you will buy a federal government bond, or maybe you will put some money into mutual fund. Decide what percentage of your 10 million you want to put into that. You've done stock market, you've done money market. Whatever is left, you can now decide, okay, should you put it into a private pension, or should you use it to go and buy land? So I think that should answer you. Does that give you an idea?
Yes, sir. Thank you very much, sir.
You're welcome.
What I just wanted to ask again is you're talking about sectors. I think you mentioned agricultural sector, banking sector. That's true. You said the insurance is not doing well. Which other sector? Say, if I want to go, at least should I just stick to the two sectors, which is the banking and agriculture, or the other sectors?
No, hold on. I'm going to have to mute everyone again because somebody, just hold on. Let me see how to mute everyone. Okay, I believe you're all hearing me. If you need to speak, you can unmute yourself. Now, the lucrative sectors in the stock market, the Nigerian stock market, based on my own experience, there may be other sectors that are lucrative, but based on my own experience and the sectors which I have actually invested into: banking sector, agri sector, telecommunication, finance, which other one? Consumer goods. So let me tell you from my own experience, the best stocks in those sectors. So in the banking sector, Gitco and Zenith, they are the best. You can buy any one of them. In the agri sector, it is Okomu and Cresco. In the telecommunication sector, it is MTN and Airtel. In the consumer sector, and if we narrow it down to, companies that are producing cement, it is Dangote Cement. Nobody competes with a Dangote Cement. In finance, and I've forgotten how they describe this thing, but I know in finance, NIDF is doing very well. NIDF, they pay dividend consistently and they pay 4 times in a year. In the real estate sector, because we have what is called REITs, Real Estate Investment Trust. These are big time developers in Nigeria. They have houses in Lekki, Abuja, Ajah, and other places. They build skyscrapers. They build multi-complex buildings, and they are listed on the Nigerian Stock Exchange. And those properties, some of them, they sell them. Majority of them, they rent them out, and they collect rent, and they share their rent with you, because that's why they are able to pay you dividend. And they do it every 3 months. So you have to look for stocks that meet those conditions for you to invest in them. So in the real estate sector, which is called REITs, Real Estate Investment Trust, the leader in that sector is a company called SFS REITs. There are a couple of others in that sector, but they don't come close to SFS rates. So I've given you about 5 or 6 different examples. I think you too should do your research and get more. And I always encourage people, use ChatGPT. ChatGPT can give you all the answers to all the questions you want, or maybe almost all the questions. ChatGPT can answer it. Okay, any other question? Anybody
Thank you
else,
very much,
please?
sir. I appreciate. And
You're
God
welcome.
bless.
You're welcome. Any other question? Anybody else? Anybody else?
Thank you,
Any
sir.
question?
I understand on the stock exchange, there are ETFs as well. Would you advise investors looking into ETFs as well?
It depends on where you are at the moment. It depends on where you are. Some people will say, if you are a beginner, it's better to buy some ETFs because ETF is like, how do you say it? ETF, you have 3 or 4 or 5 or even 10 stocks in one basket. So you pay one price and then you have a little bit of different stocks, which is similar to what Stanbic is doing. I think, I can't remember, maybe they call it Stanbic 30 something.
Yes.
So you have a group of stocks in one basket. For me, I had a look and I cannot really see any good returns in terms of dividend. I've had a look at this Stanbic ETF, Stanbic, I think they call it Stanbic 30 ETF or something like that. But I've been trying to find out, have they ever paid dividend? Has Stanbic in particular ever paid any dividend on these stocks? And from the last check that I made, this Stanbic ETF is about 4,000 naira, if not more. So why would I want to buy something for 4,000 naira and I'm not going to get any dividend? Maybe they've been paying dividend, but I couldn't find it. If you can find any ETF on the Nigerian Stock Exchange and they have a track record, they've been paying dividend for at least 5 years, why not? Buy it. But if you cannot find any track record that they have been paying dividend, then maybe you have to think twice. As an investor, the reason why you are investing your money is because you want returns. And if you are putting it somewhere and there is no assurance or there is no track record, not assurance, but there is no track record that they have been paying dividend consistently, you don't want to put your money there. Some people will indulge them and say, oh, well, if I buy it for 4,000 naira now, maybe in 2 years' time, it would have gone to 6,000 naira. Okay, you can indulge them. But I don't want to wait for 2, 3, or 4 years for the price to go up before I enjoy the return on my investment. I want something, I want to invest in assets or businesses that will pay me every year. And every year, the dividend will go up slightly, not necessarily dramatically. Jitco paid, I think they paid 8 naira 30 kobo for the financial year end 2024. Financial year end 2025, they paid 12 naira 76 kobo. That's a big improvement on what they paid previously. Dangote, this last financial year, Dangote paid 45 naira per share as dividend. Previously, the year before that, Dangote paid 30 naira. That's the kind of stocks I want to put my money in. The year before, they paid 30 naira per share as dividend. The following year, they paid 45. Gitco paid 8 naira 30 kobo. The following year, they paid 12 naira. That's the kind of stock I want to put my money in. I don't want to wait for 5 years and then, oh, okay, Dangote cement and stock has now gone up from about 500 naira that I bought it. It has now gone up to about 3,000 naira. then I can now cash out. I don't want to cash out. I don't want to cash out. I want my stock to be there, but I want them to pay me every year. If possible, maybe twice in a year. And if you are lucky to put your money in stocks like NIDF or Seplat, you get paid 4 times in a year. I hope that answers your question.
Yes, sir. Thank you, sir.
Okay. Anybody else? Any question, please? Maybe I'll take another 2 questions and then quickly go into these quality stocks and cheap stocks in a deeper way. So maybe another 2 questions. Anybody else with question, please? Okay, I'm just having a quick look at the chat section. So let me see what people are writing. Okay, so somebody said, do you think Seplat can get to 20,000 naira per share? Okay, well, I cannot predict what Seplat will do, and I will not encourage anyone to buy Seplat because you are thinking it will get to 20,000 naira per share. You cannot predict how far it will go. At the beginning of this year, I think Seplat was around maybe about 4,000 naira per share or 5,000 naira. And all of a sudden, for some reasons, it picked up. And then it went to 7,000. It went to 9,500. When it got to 9,500, that was when I thought there is something about this stock. I'm going to buy it. So I think I bought about 5 units of Seplat when it was 9,500. And some people are saying, oh, the price has gone up too much. It's going to crash. It's going to come down. But from what I saw, it doesn't look to me like it's going to come down or crash. So I bought 5 units at 9,500. Within about 2 weeks, it went to, I think, about 10,540. And over a period of time, it has gone past 11,000 naira now per share. Whether it will get to 15,000 or it will get to 20,000, I don't know. And for me, I'm not too worried about where it gets to. My concern is how much is it going to pay me every year? And good enough. Seplat is paying every 4 months. So recently, I bought additional 5 units. So now I have a total of 10 units of a Seplat, and they pay every 3 months. That's good enough. Whether it gets to 15,000 or 20,000, it's okay. I'm not worried. If it gets to 15,000, I will be happy. If it gets to 20,000, I will be happy. Okay, let me see another question. Good afternoon, sir. I'm just joining in and was invited by a friend. My first time here. I appreciate your teaching and knowledge you are sharing. What investment can I start or venture into with 10 million naira? I think I answered that question a few minutes ago. Okay.
Yes, you did. I was the one that sent that message, so no problem. You've answered it. Thank you.
Okay. Somebody also said, example of 20 million naira to invest. I think I answered that again.
No, just a summary of what you said, sir.
Okay. I'm just checking any other. Okay, somebody said Seplat is now 11,363 naira 90 kobo. Yes. So if it keeps going, that's okay. If it stops there, it doesn't bother me. But as long as it pays me every 3 months. Okay, I can't see any other question in the chat area. Okay, so one more person to ask question, and then I can go a little bit deeper into these quality stocks and the cheap stock. Any other question? Just one more question. Anybody? Anybody else question? So everybody is managing their stocks very well. You don't have any problem. Everything is fine. Your registrar is doing well. Your stockbroker is fine. You have registered with a CSCS. You know how to use limit order compared to market order, everything is fine. I want to assume if nobody is asking question, I want to believe you're all doing fine. You know how to check when your stocks are going to pay dividend, because I see people asking questions randomly. When is Dangote Cement going to pay? When is Jitco going to pay? All those questions, you should know how to check them without asking those simple questions. Go into stock analysis. There is a website called Stock Analysis. You go in there, it shows you answer to all those things. You want to know the next date when a stock will pay their dividend, you can find it there. You want to know how much was Jitco share 3 years ago? How much was it 2 years ago? How much was it last year? How much was it at the beginning of this year? You can see it inside stock analysis. If time permits, I will open stock analysis and then I will show you those information. That's if time permits. And then I can also show you my own stock portfolio as well. But let's see, because I want us to finish this before 7, maybe about 5 minutes to 7 or 10 minutes to 7. Okay, so anybody else with any question? One last chance. Anybody else with any question? Nobody? Okay. All right. Okay, so let's go into this quality stocks versus cheap stocks. Maybe we can do that over the next 15 minutes. For me, when people say they cannot afford a particular stock, it's not that they cannot afford it, because somebody have 10,000 naira and they want to buy shares. The first thing in their mind is, I want to buy some shares that I will have many units. So this 10,000 naira, excuse me, this 10,000 naira, can it buy me maybe 10,000 units of a GSWYM? Can it buy me 7,000 units of TIP? Can it buy me 6,000 units of maybe Wema Bank or FCMB? They are thinking in terms of high number of units that their money can buy. But that's not the way you should be looking at it if you are a smart investor. What you should be thinking about is, this 10,000 naira, which stock can I use it to buy that will give me the highest returns? It's not about the units, and I will show you. It's not about the units. If 10,000 naira can give you a return of 500 naira every year, you buy one stock. For example, let's say you buy Seplat, and Seplat is about 11,000 naira something. So you buy 1 unit of Seplat at 11,363 naira. And Seplat can pay you 414 naira 80 kobo on 1 unit. I think that's better than buying 9,000 units of GSWYM, and at the end of the year, for your 9,000 units, they will now pay you maybe about 100 naira. So it is not that people cannot afford the stocks that are a little bit expensive in their own opinion. It's not that they cannot afford it, but they want to, just for the sake of saying, I have 5,000 units of this stock, I have 1,000 units of this stock. Just for the sake of ego, I have this number of units. That's why they are looking for penny stocks. Because even the penny stocks, okay, I don't know, let's say the penny stock costs maybe 10 naira per share. You're not likely to buy 1 unit. You're not likely to buy 2 units. You're going to end up buying maybe about 50 units, maybe about 100 units, maybe about 100 units. So let's say you buy 100 units of a share that costs 10 naira each. 100 units, and it's 10 naira each. That's 1,000 naira. So with your 1,000 naira, you are able to buy 100 units. Your 100 units, I can assure you, is not going to give you more dividend than if you use that than if you use that 10,000 naira. Is it 10,000 naira? No, 100 units times 10 naira, 1,000 naira. Is it 100 units times 10 units? Yeah, 1,000 naira. So for your 100 units, that cost you 1,000 naira, at the end of the year, the dividend you are going to get will be far, far less than if you use that 1,000 naira to buy maybe about 5 units of a JITCO. But people don't want to have 5 units of JITCO. They would rather have 100 units of maybe Jay's Bank, FCMB, any other one. So what I'm saying to you is you have to change your perspective, the way you look at things, not about the number of units you have, but what you get back from what you invested. So let's have a quick look at what I have here. So data as at 12th of July, and I pick all this from a stock analysis website. So dividend history for Seplat. Seplat has a dividend yield of 3.65%, and their annual dividend per share is 414 naira. Payout ratio, 80%, 80.71%. So let me also say something here very quickly. There is not just one standard that you can use to buy stocks. I mean, standard metrics. There are probably almost 20 standard metrics you need to take into consideration. But nobody ever do that looking at 20 standard metrics. Most people, they probably study all the standard metrics at the beginning, and then you narrow it down to which 3 or 5 that you consider to be most important. The 3 or 5 that you will consider to be most important may not be the 3 or 5 that is most important to me. So everybody have to make their own decision. But for me, the 3 most important metrics that I always look into, and if any company fails those 3 standards, I'm not going to buy it. Somebody else can buy it, but I'm not going to buy it. Even if that stock pass other metrics, I'm still not going to buy it if it doesn't pass the 3 major ones. If it passes the 3 major ones, then there is a very high probability that I will buy it. But I will still look into a few other things. But if it doesn't pass those 3 standard that I said, I'm not buying it. And the 3 standard for me is, okay, let me come back a little bit. As an investor, what is the most important thing to you? The first thing as an investor is preservation of capital. You don't want to put your money where you're going to lose it. Preservation of capital. If you don't get profit, at least you want to get your money back. Then secondly, as an investor, you are a business person. If you invest, you must get profit. You must get returns. So for me, if I buy stocks and the company is not going to pay me dividend, it's not worth my time. I'm not going to put my money. And even if they are going to pay me dividend and they are going to end up paying me 10 kobo per share, Even if I buy the stock for 10 naira, I don't want 10 kobo per share as dividend. If I buy the stock for 30 naira, I don't want 70 kobo as dividend per share. It doesn't matter how much I paid for the stocks. I don't want dividend in kobo. But some people will advocate for those companies that are paying dividend per share in kobo. And that's okay. It's their choice. But for me, I have my own standard. I keep to it. Okay, so basically, 3 standard for me. The stock must have potential for capital growth. Number 1, it must have a track record for paying dividend at least 5 to 10 years. And it must pay dividend of at least 2 naira per share. If it doesn't pay dividend, or it pays like 70 kobo, 90 kobo, I'm not even going to look at anything, because I don't care whether they have the most brilliant staff, whether their office is a skyscraper, they have a multi-complex story, whether they have been in business for 20 years. That's not my business. If a company comes into business within 5 years and they are paying me good dividend, that's where I want to put my money. So everybody will have to set their own standard. Anyway, okay, so we are looking at this now. So look at the dividend yield for all these companies. Look at the annual dividend they pay and look at the payout ratio. Again, it tells you some companies, they make big profit, but they are only giving out small portion of it. Some companies, they make big profit and they are paying out a reasonable portion of it because they care about their customers. They care about their investors. So that's where you will have to know that you need to do your own research to know which company is going to be in your favor. And all this information I'm showing you here, you can get it from stock analysis. All this information is on stock analysis. But again, stock analysis website is not the only tool. It's not the only website. There is another website called Stock Bubbles. You can get the same information from there. You can go to Trading View. That's another one. There's another one, ft.com. That's another one. There are so many of them. It's only that some people don't want to do any research. They don't want to spend time looking into this thing deeper. Some people have been investing for 10 years or more, but they don't want to be called beginner investor. But it doesn't matter how long you have been investing. If you are not really learning and improving your knowledge, you are just like a beginner investor. Because if you have been investing for 10 years, 15 years, oh, you bought shares several times, but you haven't really learned how to check the standard metrics. You don't really know how to check if the stock you want to buy has paid dividend for 10 years or more. You don't really know how to check whether the shares of that company has been growing consistently. You don't know how to check how much that company is paying out as a dividend from the profit they make. Then you cannot really say you are an experienced investor, even because at the end of the day, over that 10 years you've been buying stocks, maybe 9 out of 10 times, you only buy it because you assume, oh, that company has been around for 10 years and it's a popular name, then you buy it. Or maybe you are on a social media platform and somebody is saying, oh, Wema Bank is now selling shares. They are doing a public offering. If you buy it now, within the next 6 months, the share price is going to go up. And then you jump on it. And you've done that many years. But if you look at your stock portfolio, is it a lucrative portfolio? How much have you got back from all the money you invested? How much have you got back? It's not about you invest and then after 10 years, the price has gone up so much, and then you can now sell some of those stocks. And then you can now say, yes, I've got something back after 10 years. That is not the way smart investors do things. Intelligent investors, that's not the way they do it. So haven't been buying stocks for a long time does not necessarily mean a person is an intermediate investor or an advanced investor or an experienced investor. It is what you know that makes you an intermediate or advanced. Anyway, so you can see all this. I will spend another 5 minutes to probably give you a better explanation. Maybe at the end of this meeting, I will download this video and then you can watch the replay. So there is another set of figure or data I'm going to show you to analyze the relationship between quality stocks and the cheap stocks. Okay. Just bear with me. No, that's not the one I want to share. Right. Okay. So this is the one I want to share, and I'm just going to do this within about 5 minutes. You can watch the replay. Okay. So if you look at the figures here, I've used Excel spreadsheets to actually compute this to give you a better perspective. So you have 100,000 naira you want to invest. I don't know. Is it edit? Just give me about 5 minutes to quickly explain this. You will ask your question, but just give me about 5 minutes. So look at the data you have on your screen. This was computed by me using an Excel spreadsheet. So you have 100,000 naira you want to invest, and you are thinking of Seplat, Dangote Cement, Jitco, TIP, Wema Bank, FCMB, and Jay's Bank. Ordinarily, most people will go for the stock that will give them higher number of units. So your 10,000 naira, your 100,000 naira can only buy you 8 units of Seplat. It can buy you 95 units of Dangote Cement, 793 units of Jitco, 3,246 units of a TIP, 3,333 units of Wema, 9,259 units of FCMB, 10,869 units of Jay's Bank. Which one do you think a beginner investor will jump at? Most likely, they want to jump at the one that can give them 10,869 units because they think having 10,869 units is a big number and is going to give them the best return. But it doesn't work that way. Now, look at the dividend yield for each of these companies. The higher the dividend yield of the stock you want to buy, the better. The higher the dividend yield, the better, because you're going to get more back. Okay, so dividend yield for Seplat is 3.65. For Dangote Cement, 4.30. For Jitco, 10.06. Look at it. Okay, dividend per share. So for 1 unit of Seplat, you're going to get 414 naira. For 1 unit of Dangote Cement, you are going to get 45 naira. For 1 unit of Jitco, you are going to get 12 naira 76 kobo. For 1 unit of TIP, you are going to get 10 kobo. These are the ones. For 1 unit of Wema, you're going to get 1 naira 25 kobo. 1 unit of FCMB, you're going to get 35 kobo. And 1 unit of Jay's Bank, you're going to get 11 kobo. So you have 10,869 units of Jay's Bank. and they are now paying you 11 kobo. So at the end of the year, how much would you get? And that's when you come to the next line, total dividend received. So for your 100,000 naira invested in Seplat, at the end of the year, you will get 3,318 naira. For your 95 units of Dangote cement, you will get over 4,000 naira. For your 793 units of Ejitco, you will get 10,000 naira. For TIP, you will get 324 naira. For WEMA, you get 4,000 plus. For FCMB, you will get 3,240 naira. For all your 10,000 units in Jay's Bank, at the end of the year, you will get 1,195 naira. So it's not that the stock is cheap or is expensive. People are just looking for stocks that will give them more units. But more units does not necessarily translate to bigger dividend or higher dividend. So after this minute, I will encourage everyone, watch this video all over again, especially this computation you are looking on the screen. Watch it all over again. See what you can get for 100,000 naira. 100,000 naira in Seplat at the end of the year. You only have 8 units, but it will give you 3,318 naira. Your 100,000 naira will give you over 10,000 units in Jay's Bank. But for your 10,000 units, you are going to get dividend of 1,195 naira. Is it really worth it putting your 100,000 naira into Jay's Bank? Is it worth it putting your 100,000 naira into FCMB? Is it worth putting it into WEMA Bank or TIP? Out of all these 7 stocks, which one would you rather prefer to have? Anyway, that's where I will end this meeting. So I can only take 1 or 2 questions very quickly because I have another meeting at 7 o'clock. So anybody, you can unmute yourself, ask a very quick question, and then I can answer it, and then we can call it a day or a night. So anybody with any question? Oh, yeah. Sorry. Edith has been raising her hand up. If you go first. Yes. Edith, Edith, sorry, I don't know if I pronounce your name right. I'm sorry.
It's Edith. Yeah.
Edith, okay, no problem. Go ahead, please.
Okay, you talked about being an investor. So my question is, at what point, okay, since we have, let me say 2 sets of people in the stock market, the investor and the traders, let me say you bought a stock, say GTCO, and then held it for a period of time, and then you were able to accumulate 100% gains, growth on the GTCO. Do you at any point in time take out some of the profits from the growth? This is not talking about the dividend aspect here. Do you take out some of the profit and then maybe wait for maybe a re-entry point again?
No.
Or how do you handle it?
No. As an investor, you invest for the long term. You invest for the long term. I'm never, ever going to take out any profit from my GTCO. They pay me dividend, and they pay me good dividend. Okay, let me just show you something. Normally, I don't want to share this, but let me show you something. Just hold on. And again, people should learn from this. You have to create your own Excel spreadsheet so that you can compute this figure for yourself. No, that's not the one. Just bear with me. There's something I want to share. It's not opening. Oh, just hold on. Okay, let me see. I'll find it. Okay, just give me 1 minute. I'm going to open this up. Right. Okay, another one. Right. Okay, so this is the one I want to share now. Okay, let me see if registry of my stocks. Okay. Right. Okay, yes, I got it. Okay, can you see what is on my screen? Can anybody tell me what you can see on my screen so that I can be sure you're seeing the right information?
I can see registrar, unit, price as headings.
Good. You need to do something like this for yourself. These are the stocks I have. These are the names of the registrar. These are the units that I have. This is the unit price, the current price, and this is the market value. Now, these are the e-mandates I have for each of these stocks because I use two banks. I use a GTB and I use Stanbic. So when they pay dividend, I know where the dividend is going into because some people, they have 2 or 3 banks and they pay your dividend into GTCO, but you are looking into your WEMA bank account and you are thinking, oh, they haven't paid me. So you need a list like this. And then again, if you look at pay method, I know which one pays me twice in a year, which one pays me quarterly, which one pays me 3 or 4 times, but that's not the area I'm going. Now, this is where I'm going. This is what I got for the financial year end 2024, which was paid in April 2025. GITCO paid me 316,000 naira. My 50,000 unit is there. It is still growing. They pay me 316,000 naira. I can use it whichever way I want. Why do I want to sell the stocks? It keeps growing. For the financial year end 2025, which they paid this year, GITCO paid interim dividend. They paid me 45,000 naira interim dividend for for financial year end 2025. When they paid the final dividend, they paid me 529,300. So from GITCO alone, I've collected 1,075,000, which I can use any way that I want. My stock has grown from 45 naira when I bought it. It has grown to 126 naira per unit. The total money I used in buying GITCO is about 2.2 million. The total value of my GITCO now is over 6 million naira. Why would I say, oh, now I have 6 million naira. Let me sell about 2 million naira out of it. Why would I want to sell it? Because if I sell 2 million naira and I cash it and I spend it, if I want to enter back, am I going to be able to buy GITCO at 45 naira? No. Can I buy GITCO at 80 naira? No. Can I buy it at 100 naira? Maybe not. So I'm going to leave it for as long as for the next 10 years. I'm not going to sell it. Unless, and I pray nothing like that happens, unless I'm in a situation I need money and I don't have any other alternative, then I can sell my GITCO. But if I am not in a desperate situation, there's no reason why I should sell my GITCO share because it has gone from 2.2 million that I paid for it. It has now gone over 10 million naira. No, I'm still not going to sell it because they pay me money. They paid me money. Last year, 316,000. This year, they paid 693,000. If I add the interim and the final, they paid 693,000. Within 2 years, they've paid me over 1 million naira, which I can spend whichever way. Why should I sell part of it? Because it has grown higher to 6 million naira. So that's the way I look at it. But some people might tell you, oh, you can sell it, and then you enter again. At what price are you going to enter again? But I am an investor. I'm in it for the long time. Does that answer your question?
Yes, right. Thank you so much.
Okay. I'm sorry I won't be able to take another question because I'm supposed to be in another meeting at 7 o'clock and it's already 6 minutes past 7. So what I would just suggest is watch this video again when the replay is posted. Look at all the things. Look at the way I manage my federal government bond. I already did a computation. I know when they are paying. So on the 14th of July, I'm going to get some money from a federal government bond. And on that same 14, I'm going to get another one because I did 2 in that particular month. No. Okay, I did 1 in April, May, June, July. So I did 4 consecutive months. So there are some months I get paid twice, and there are some months I get paid once. It depends on if you do 6 months in a row, then you will get paid twice by federal government savings bond. You need to have a spreadsheet where you can put all this information and it is easy for you to track your investments. You have some stocks, you have a federal government bond, you have a mutual fund. This is for my GT money market. Initially, I was tracking the interest they put every day, but now I stopped doing that because there is no need for it. I can easily log in and see. But you need a spreadsheet like this that you can easily track everything that is going on your investment portfolio. Your investment portfolio is the bigger picture, and you need to be able to see what is going on. Anyway, thank you all very much. We will see again next Sunday. Invite your friends. Let's meet again. Prepare your questions because I think people are not asking me enough questions. Because, if I look at today, how many people ask me questions? Maybe about 6 or 7 people. That is after I have repeatedly ask your question. So next week, let's meet again. Prepare your questions. Maybe about 15 people will be able to ask me questions next week. Thank you all, and we will see again. Have a good night. Thank you all, and bye for now.
Thank you. Good night. Bye.
All right. Thank you. Bye-bye.